Okay. Hi, guys. I guess we still have one person which is not here yet. Should we wait, actually? Or we just start?
I think
we still have one person. Oh, okay. So it's this way, okay. Okay, guys. I think for the last panel, the investors were talking also about DeFi. So I think for the next half an hour, we are going to have just a deeper dive into the recent developments into the digital trading. So we have four contributors in the space, and I'm going to have a few questions to all of them, guys. So I think first of all, I'm just really wondering, just also in general to give people some context into each one, what they're doing and so on. So because all of you guys are here providing, striving to provide great DeFi trading experience. So, but with a decentralized way, there always comes to the hurdles or difficulties in terms of liquidity and also slippage. And how did you design your product to solve this problem? So also with your introduction, each one, please.
Sure. Yeah, happy to start. Hey guys, it's Vijay here. So I head up business development and growth at DYDX. I've been there close to about 2 years now. Liquidity is something we take very seriously as a derivatives exchange, because if you think about the users of a derivatives exchange, whether it's centralized or decentralized, you need deep liquid markets that support extremely high turnover trading, regardless of whether you're an institutional or a retail user. So that's something that we paid a lot of attention to in terms of product design and making it easy for both API traders as well as front-end traders to scalably trade and have a seamless trading experience, as well as from an incentive standpoint. Given that we're in DeFi, we have a token model. And so the token is paid out programmatically based on a number of factors. And specifically, there is a token emission earned for providing liquidity. And so we spend a lot of time analyzing trader behavior and really thinking about what is sustainable liquidity. And specifically, that is deep depth, spread, uptime, and the number of markets where liquidity is being provided. So we deterministically scored that and developed this incentive framework that pays out the token emission based on performance according to that framework. And that's been really effective for DYDX to be able to have markets as liquid as 50 to 60 million of depth, which is often in excess of what FTX and Binance have. So for us, that's been a great outcome, and we're now focused on encouraging a lot of retail traders and really helping educate them on the DeFi story and how DYDX compares to FTX and CME in the centralized world.
Mounir, founder of Paraswap. It's a decentralized exchange aggregator, similar to an Expedia for booking airline tickets. Our approach to liquidity, well, we are an aggregator, so by definition we have access to the whole market liquidity. So users are always better using an aggregator than going to directly an exchange, because they simply will have this unlimited exposure to market liquidity. What we try to do as well is to create our what we call Paraswap pool, which is our own liquidity between code. It's not really operated by us directly, but it's operated by external market makers that bring their own liquidity and create a new market or a new decentralized exchange based on what you call RFQ. So that helps us on adding on top of the market liquidity, adding a new kind of trading that is more efficient and has no slippage and so on. And we built an incentive on top of that, so that those market makers, they are already competitive. They are providing a high superior execution, but we are adding an incentive on top of that by paying them. It's similar to make a rebate, and guess you guys at DYDX are doing a similar system for order book-based exchanges. We are doing this for RFQ, and the goal is to make them even more competitive and drive more volume to these guys. And it's like a virtuous cycle. The more volume they'll be making, the more competitive they become, the more users they're becoming. So that's worked very well well. So if you go to Paraswap and try to trade large amounts, like 100,000, 10,000 ETH, you'll be surprised to find a super decent price. And we are still running as an aggregator. So at the end, even though this is like our own DEX, but it's not really DEX, it's just aggregating market makers as we aggregate liquidity pools on other exchanges. And with those incentive mechanisms, we are able to deliver prices that are very, very competitive.
Hey, I'm Frisky Fox, the founder of DeFi Kingdoms. And you asked about how do you kind of like lower the barrier of entry or help to like facilitate the trading of like those assets, right?
I think in general, like how to add liquidity like into your pool, because like DeFi Kingdom is also, you know, like DeFi plus like NFTs, right? So you have like the pools and also like the market. So how to add liquidity basically. Well, besides your native tokens.
Sure, sure. So ours actually was kind of like a different approach. We were trying to approach it in terms of like basically how do we lower the barrier of entry and make it so that end users can actually understand it in the first place. Because there's so many people that I've tried to explain this to. Like, okay, like you have to go and pair some NFT tokens or like all that stuff and then stick it in a pool and then stake it. And it's just very hard. So we basically created our game to make it such that it's easy for people to understand what's happening, and it's just a very accessible thing there. And then from that platform, it's basically creating a whole like universe or like economy which you can build on and add other protocols on top of that. So we've actually like integrated with aggregators and other things there as well, and expanding there as like we go.
Thank you. I guess, yeah.
Hello, sorry, it's Varun here. Can you guys hear me?
Yes, I can hear you.
Oh, perfect. Yeah, no, just in case, I just want to check quickly. But this is Varun here from Cashflow. Sorry, you guys, I couldn't join you guys in person, but I'll give you a bit of a quick background on Cashflow. It's in the most boring definition of Cashflow, I would say, it's a decentralized exchange protocol. Now, where things get interesting is essentially, I think if you look back in 2019, 2020, like Uniswap essentially solved the idea of 0 to 1 for DeFi, where it essentially got people excited about the idea of trading against a vending machine. Where you go and request a quote and you receive something and you trade, right? So, and then it also popularized the idea of putting assets in a pool, being a lazy LP, and then earning yields, right? So those were the top two merits that came from Uniswap design. But at the same time, if you look around how the protocol evolved, it also became highly capital inefficient in terms of requiring lots of capital in order to create markets. And secondly, not all markets are made equal. Like if you look at blue chip assets, the pricing and the spreads you get are pretty tight. But the moment you go beyond blue chips, you start to see that the markets are not necessarily that great. And our thought process here was, what can we do to build a more capital efficient market structure that not only allows the behavior of lazy LPs to earn yields without impermanent loss, but also allows for better markets for any assets that are not just blue chips, which essentially was the fundamental motivation behind Cashflow's design, which is essentially letting market makers plug into Cashflow and creating pools and using them to create markets and bring in liquidity. Now, there are three flavors in which you can add liquidity to Cashflow, right? So one is obviously you as a market maker can basically bring in your own funds and then quote via RFQ as Mounir described in Paraswap model. Now, a more interesting model is where you can essentially use pools to bootstrap assets or inventory from perhaps your known permission public keys and use them to market make. So as a result, you as a market maker is only bringing the pricing strategies, but is not necessarily worried about having the inventory to support those trades. And the last one is, if you're feeling very, very edgy, is you can basically bootstrap capital from anyone, like the apes and punks around the world, and use that to market make. So a good comparison is if you think of Uniswap pools as your smart contracts doing the market making, using bond and curve as a formula to price the assets. In this case, what we've done is we've outsourced the idea of market making to market makers who excel and spend hours of compute time and capital to market make, but then the inventory can be bootstrapped by people who are essentially giving capital to the pools, right? So the outcome is you're essentially getting no slippage trades that are protected by MEVs. And you can price any asset that is not just limited to blue chips. And from an LP standpoint, they can essentially earn yields without impermanent loss. And you have like a robust mechanism that can scale from one to n, right? So that's generally how Cashflow works. And in terms of how we are getting people onboarded, am I going over time, by the way? Let me know. Hello?
Yeah, hi.
Oh, sorry. Yes. So we don't have a token just yet, but what we've done initially to onboard people was we started with using an NFT strategy to essentially build a game. Where essentially we build this character called Hashbot and use that to incentivize people to participate in the game and become involved in the protocol. And the idea around NFT, I think I have a different philosophy on how NFTs work and why they are a great way to do brand marketing and bootstrapping retail flow. But we can talk about that in the subsequent questions. So.
Okay, thank you. Thanks for the very detailed explanation. I think my second question is also going to be very general. Just what do you think of the network effect in terms of DEX trading? Because I was yesterday checking in terms of the spot trading, maybe not 100% necessarily relevant with you guys, but Uniswap is definitely still capturing most of the market share. It was actually over 33%, and it's 3 times as big as a Pancake, which is the second one. So them two together already takes up to almost 50% of the whole market share in terms of DEX spot trading. So how do you see this? I mean, the market. So where would be the space for the new DEXs to come for the market, and what do they need to do to be able to just capturing more market share and receive also new users?
Yeah. Yeah, I think this is a really interesting question, and I'm sure everybody's going to have a slightly different view on it. I think from our perspective, derivatives exchanges probably follow even more of a power law distribution than, say, spot exchanges. And so the dynamics that you observe in spot decentralized exchanges, you would see to kind of an even more exaggerated effect in derivatives exchanges, and maybe more concentration over time. But I think something that DeFi has shown is that it's very competitive and there's always room for new competitors, and the cost to entry is relatively low. So if you have a good product, regardless of what exact market structure the exchange takes, if it's a central limit order book or an AMM or RFQ, there's always room for new competitors to come in with a specific focus or angle. And I think one area that seems to where you tend to see that a lot is with new layer ones, you tend to have a decentralized exchange that focuses on that layer one ecosystem. For example, in Avalanche, there's Trader Joe and Pangolin. And so I think that's one angle where you can really focus on building out a DEX that's optimized for that specific L1. And so you can build network effects there. You can also build network effects through your choice of collateral. And I think that's something that Uniswap has really shoehorned effectively with its AMM model of supporting all assets, right? On DYDX, we only support one form of collateral, specifically USDC. So we can't necessarily engage with as wide of a base of users, but the base of users that we have is very engaged, probably to a much more significant degree than you see for a lot of other decentralized exchanges. So I think the exact answer in terms of the potential probably depends on the exact product type and market structure, the layer one, and the choice of collateral. But high level, I think there continues to be room for new competitors, and we see that every day. But probably we'll also start seeing some consolidation over time or network effects building around specific DEXs, like what we're seeing with Uniswap v3. And probably we'll see that in many other decentralized exchanges that are market leaders as well.
Yeah, totally agree on the innovation side. Good products always find a place, even in the crowded markets. Now DEXs became more and more sophisticated, and you have to achieve network effects, you have to figure out the supply and the demand. And what we're seeing right now is that some will focus on one more than the other. Like many will focus on limiting impermanent loss. Some will focus on bringing the best possible prices. The idea is to figure out one, and the other parts of the side effect is going to take care of itself. Not always easy, but you have to figure out one or create an incentive for one. This is what we had with DeFi Summer, with huge liquidity mining in order to bring liquidity so that the demand is going to come. There are different models and different approaches, but I think it's going to come down to always having a good product that is very well solving that particular problem. So I think DeFi is more challenging right now to build liquidity, but it's definitely still early stage, and there are way more room to bring more innovation if the products are good enough.
Yeah, so anybody can create a clone of any of these DEXs in like a few minutes and have a site up and running. So the trouble is, how do you create something that's unique, that has something that can stand apart, you know? And that's actually like one of the reasons why we created ours, was to basically figure out how to make a exchange that has staying power, that has a like utility token that actually has more utility than just being used to basically explode and then basically dump afterwards. And so I think any exchange that is like willing to look outside the box and say like, what can we add to the experience will succeed. And so, for example, ours is like a exchange, but it's also a game that's built on top of that exchange. So the like utility token there is actually used in the game to create NFTs and to play the game with those NFTs and have them get leveled up. So it actually has outside utility outside of that DEX itself. And at the same time, those other like NFTs can augment how much you can earn from the DEX. So it kind of creates this like loop there where it helps itself. So I think that's the key, you know, trying to figure out how you stand apart. Speaking with like Luigi at Avalabs, he was asking us, as we're starting to look about having us come onto the Avalanche ecosystem, is how could you compete with like Trader Joe and like some of those other ones that are already out there? Why don't you guys just like use their exchanges instead of creating your own? Because it's just noise. And I said, well, we had the same thing over on like Harmony, where we started out small and then very quickly in like a few weeks we were basically like the largest DEX there. And it's because we offer something new on top of just the plain old like trading stuff around. And really that's the key there. So on to you over there.
Hello, thank you. So I think I share a similar perspective in terms of market segmentation, right? So Uniswap obviously attracted. So I have like two theories here. So one is obviously what niche are you focusing on that will allow your customers to come to you, but also brand loyalty is a key, right? So when you're starting a crypto company or DEX or anything broadly, you're essentially starting a cult, right? So you basically one is obviously product is the key, but then you also need that cult-like following that people have loyalty for, right? So, and if you can build those two segments, then you can essentially penetrate the market. Now, in terms of what Hashler has been doing, obviously, we started with a DEX, and now our idea was to start focusing on the institutional segment, where there's been a massive demand in the institutional side to get into DeFi, but they were trying to figure out how. So we're like, let's get those guys in because that's the untouched market at the moment. And B, we're about to launch our next interoperability feature that allows people to trade between different chains quite seamlessly in one transaction, right? So those are the kind of niches that are beginning to form that will allow people to have something more unique than what they've already seen, where they get to experience something, right? So that's the product side. But then again, it comes down to how do you develop this idea of your brand that people will be loyal to long term, right? Which is what we've seen like with things like Shiba Inu, for example. Now, if you can argue that it's just a clone of Uniswap, but at the same time, this idea of love for Shiba Inus has built them a $13 billion protocol, which depending on what they do or what they don't do, right? But it's essentially, it's got this market share because of the brand loyalty. So I think the way I like to think about this problem is there's two ways, right? One is obviously building a really, really good product, but then also be focusing on developing that cult that people will fall in love with, right? If you can hit those two pain points, then you'll have a big market share.
Thank you. I think it has been like a really great answers, and because you guys also mentioned like in the crypto space, I think people can always like fork it, right? If you don't like it, just fork it. It's really different from like Web2, which is like our like a VC's like a background. It's like we are backed by some of the biggest like fintech giant like in the world, and then like it's always like hard for users to shift from like one platform to the others because all of your network, all of your basically like network connections are attached to this platform. So in Web3, how you guys like keep like the competitive advantage like in the long run? And in terms of like product, what is the next most exciting like milestone ahead?
Yeah, it's a great question and one that we think about a lot in terms of how our team figures out its strategy. I'd say in general, something that it's what makes the crypto space so special is that kind of competitive aspect as well, where really the best player wins in a free market, and so it really drives people to develop the best product, and if people need to fork it, they will. And I think the best part of that is that users are the ones who benefit the most because they tend to, then have a stake in both ecosystems, and it's really up to the projects to determine who's best and kind of innovate accordingly. So that's actually, I think, a pretty healthy dynamic in crypto is it ensures that people continue to build for the users as opposed to relying on kind of entrenched monopolies. Specifically with DYDX, our next major product update is full decentralization. So currently we have a hybrid product where the clearing and settlement and the funds management is entirely on-chain, but the matching is off-chain in a central limit order book. And so with this upcoming product launch of V4, which we're expecting for kind of the start of next year in 2023, it will basically move that matching process entirely on-chain, and it'll continue to be an order book-based model, but we're basically building for that paradigm versus, say, the AMM paradigm in which you see a lot more players in the market. And a big reason for that is the market that we play in, which specifically is derivatives, and just the nature of trading in that market, which requires kind of high throughput, low latency market conditions, and the pricing is extremely important and sensitive. So that's kind of how we think about the world. In terms of how we're doing that, we're looking at a number of layer ones right now. Our engineering team is doing a lot of R&D, and we kind of have a short list of candidates that we're looking at that we think can support that implementation effectively. And I think ultimately what we hang our hat on is the strength of our engineering team and our ability to consistently ship high quality institutional grade product. Even if it does become entirely open source in V4, we still think that we'll be in the position to kind of help support that ecosystem along with many others at that point as well, and that's something that we welcome. And then the other thing is just kind of existing network effects, where we're able to bring our core base of hardcore users, and they're along with us for that journey, which is a great thing to have, especially as we go through a migration from V3 to V4 and full decentralization.
Yeah, well, forking is definitely, I agree, in adding, giving the users choice and the ability to encouraging the new team that forked the protocol to improve on top of, because it's just a copy paste. It's not going to matter maybe just for a little while, but the original product is going to take away. Similar to open source projects, software open source projects, where forking itself is not enough. It's just a way of having this freedom to express an idea by code. It's valid also in crypto. I would say forking a product is not enough as well, because we can fork a product, we cannot fork a community that is behind that product, cannot fork the users behind the product, cannot fork the brain power that is building on a daily basis to improve also the product. So it's a good as an optionality that we have in open source and in crypto, but I would say it's not really enough. I think the core team should continue innovating and also agree on decentralization. That's something also we committed to fully decentralize Paraswap. So that's the way we want to measure it, is the core team can switch off literally for 3 months and come back, and Paraswap is even better than what it was. So this is the aim, and I think that creates also a new kind of network effects, because now it's no longer a core team that it's running the operations and running the software. It's a network. It's a complete network with its own incentives and so on. And that's also very hard to fork. Its software is very easy. It's just a Git clone, but we're talking about a whole ecosystem. So I think this is what gives the moat of a crypto project. And that's also a sign that it's delivering and that it's very high quality.
Yeah, no, that was excellent points there about you can't steal a community. Like, how do you stay ahead? You invest in your community, you stay transparent, you earn their trust, you expand your team, you plan like 3 steps ahead. Other people will steal your ideas. You know, they'll steal your code sometimes, but you are already trying to move on to the next thing while other people are trying to catch up to you. You have to stay 2 steps ahead. And so that's why we're expanding onto other chains. That's why we're expanding onto our own net over here on Avalanche that we're doing. And just creating like 3 steps ahead, basically, to make sure that we maintain the first mover advantage that we had. We had a very original idea, and now there's a bunch of other projects out there that are trying to copy it, which is fine. And we are basically moving ahead while they're still trying to catch up. And really, that's the key. Invest in the community, earn their trust, grow your team, and stay 3 steps ahead.
Right, sorry. So I think the question was around what is a new alpha leak, what we're shipping next. So I think generally we're striving to building a really good decentralized trading experience. I think the next thing on our roadmap that's going to be is interoperability. That's the key, where we've seen that till date we have people appear in native chains, but being able to natively transfer assets between the chains in a way that is not reliant on bridge or receiving a wrapped token or something else is like super key, where you essentially send ETH on Ethereum mainnet and you receive AVAX on Avalanche, right, in one single transaction. So that's going to be our next big release that's coming up soon, that we've been working really hard on. And I think that's something I'm really excited about on what's going to happen next. I think that's one of the super crucial, I think, building blocks to get DeFi to the next level is the ability to swap between different chains seamlessly.
Okay, thank you. I think we still have like a few minutes left, 2 minutes. So we'll just do like 2 rounds very quickly, like answers. So first question, if you can choose again, just like not in the field where you're already working on, another field like you felt like really excited, can be just like very short answer, like Web3, NFT, GameFi, whatever. It's kind of nice. So please.
Yeah, it's a great question. I think for me, it would be something in the gaming and kind of the GameFi intersection, which is, it's an area that we are thinking about at DYDX, but I think it's definitely high potential. And yeah.
Something related to NFTs, because it's for the first time we were able to get the attention of the crowd. Crypto was always limited to a small community, and since the emergence of the NFT craze, so we see literally everyone and the biggest brands interested in NFTs. So I think it's a great way for bringing or like onboarding the next billions of users to crypto. So I will definitely work on that if I'm not working on Paraswap.
I actually asked myself that same question almost a year ago, because I was in the other projects and I left and I started this, and so I would stay where I'm at. Like, this is the space to be.
To me, I would say decentralized journalism would be something I'd be very interested in if I were not doing something like this. In general, my thinking is that decentralization is a must where there is a monopoly that is taking advantage of current things. So the moment you actually decentralize that power of checks and balances, it actually restores order, you could say. And I think journalism is one of those areas where that's sorely needed. So I think that's what I would be doing if I was not doing this. Okay,
so like my last question, like for this panel, I'm sure like there are so many builders like want to also build stuff, you know, like in the DEX stuff. So one advice or suggestion like you could give thinking of like, the past time, like you are building like this product, you could have done better. Where you could have done better, give this advice, suggestion to the builders like on the audience.
Yeah, I'd say, so from my perspective, I think focus on user education, both for the product itself, but also for the kind of the asset or the thing that you're supporting, right? So if it's for DYDX, that's perpetuals and derivatives, right? So we're thinking a lot now about how can we educate users not only how to intelligently use the DYDX product itself, but also to understand what these perpetuals are, how they can help, and sort of where they're useful. And so that's something that we're spending a lot of time on now, but I think doing that earlier in the product lifecycle can also be quite helpful, and in many ways help you to expand your potential user market as well, right? So that they become sustainable long-term users and not just one-times, one-and-done type users. Yeah.
What we would have done better is being mobile first. So that's something we learned later by learning and by seeing also crypto evolving from being mostly desktop to being almost more than 50% from what we see, at least in our perspective, coming from mobile. So I encourage other people to also think mobile first when building DeFi project or front ends for users.
I would say don't underestimate the power of your community, because there's really amazing, very, very talented people inside of our community. And I think at the start, we sort of like went in with the expectation of, oh, let's build everything ourselves. And we very quickly realized that our community is the best one in the entire space. And they have all kinds of skilled, very talented people that we have been like relying heavily on, and it's been really good since then.
Yeah, I would say start off something simple and then iterate. I think that's the easiest way to build something grand. You can have a massive grand plan to go execute on that, but then I think breaking them down into chunks and then shipping simple things and then iterating based on the observed data is probably the best way to iterate faster and ship good products.
Okay, thank you. Thank you for all of the audience patience and also like all of you guys like insights. I've learned a lot. Hope you guys also enjoyed it. Thank you.